All right, we are live for Ask Me Anything's happy hour. And not only are we live, man, we had an epic wealth webinar today. That was pretty impressive, pretty amazing. Craig really pulled it through with Jesse's plan designs. Whether or not you were on that or not, that should definitely bring some really good questions to this audience here. So we've got a really good crew. We've got some interesting ideas to talk about, but we want to answer your questions. That's what this is all about. So we'll be right back after this. All right, we are back a couple minutes late, but that's okay. We had a little bit of tech issues. So this is Ask Me Anything, and this is a happy hour, although my happy hour is now tea with honey. Not quite as fun as a cocktail or an old fashioned or any of those other things.
Hey, I don't know what's happening. I've got some positive energy tea myself, man. So maybe it's a tea kind of afternoon.
Shauna hopefully has a beer. At least somebody's got to have a beer. Carson, no beer.
No.
Greg, water.
It's a mystery. What is it?
Yeah, we don't know. We don't know what's in there, but we are here to answer your questions, and that's exactly what we want to do. So make sure you get those questions ready. But what we're going to do, we're going to kind of go around the block here, and everybody can talk a little bit about themselves. And yeah, let's get into it.
I'll start because I'm in the middle.
That way.
So I'm Shauna. My house is currently under construction. I'm getting popcorn ceiling room moved, which has been on my heart since I took my first breath, it seems like. Can't wait for that to be gone and completed. And then I'm getting new floors next week. And so I'm kind of just sitting in like an empty room with my little R2D2 looking shop vac. So I'm here to, help with AMA today.
That is pretty awesome. All right, Kevin, up to you.
Good afternoon, everyone. Coming to you from Hoover, Alabama. Chris, I was in Buffalo last weekend. It was 20 and snow, and it's 70 and sunny here in Hoover right now. So I was glad to get back. I'm with One America, and I handle all your long-term care questions or planning to the end. And how do you protect the wealth that you've created at a time when you need this most to provide the resources and the income to pay for care later in life should you need it? So any questions you have on that or planning to the end, more than happy to answer them for you.
And Kevin has magical stories, so we're glad that you are here because every time you're here, I get excited about long-term care. And not many people in the world can do that. So,
I second that.
Absolutely.
Yeah, it's actually on my list, Kevin. We will be having more conversations in the future, and it's something that everybody needs. So if you haven't started thinking about that, it's all about the resources. That's what Kevin's going to tell you, folks. Not to steal his thunder, but that is what he's going to learn you about. So I'm Jason Sipple down here in Ocoee, Florida. It's also like in the 70s. I was skiing last week. That's okay to be cold. Tearing up the slopes, even though Chris says it doesn't really count. It's not snowboarding. But my son's doing that for me. It's fair. And Founding Fathers here to, webinar every Thursday. Come check it out at 3 tomorrow. It's we're going to always make infinite banking simpler. We're going to talk about the 3 most common misconceptions of infinite banking tomorrow. It'll be a good time. So now over to my buddy, Mr. Yenny.
Hey, everyone. Craig Yenny here. Tuned in from lovely Castle Rock, Colorado, where I'm glad I'm in a house that has a nice, strong foundation because it sounds like it's about 180 mile an hour wind out there right now. But Kevin, I wonder if your algorithms are smart enough to tell me when my end of life is. I mean, that's the big question I have, so I can plan for that appropriately. But anyway, we had a really awesome wealth webinar today. We pulled back the covers. We did some policy design. It was kind of, Chris had this idea of let's just show people how we make the sauce. And so we spent some time doing that. Hopefully there's some good questions about that today. But want to throw a quick commercial out there and I know Shauna and Chris, you'll probably hit this later, but we have a 3-day virtual event coming up March 1st. Those are always cool because you bring in all sorts of different speakers and different people sharing different ways of building wealth, protecting wealth, creating wealth. And so we have some really neat things planned for that as well. So mark your calendars, March 1st, 2nd, and 3rd. So that's all I have right now. So on to you, Carson.
Guys. Carson Herline here. I've been with Chris and on this team for a couple of years now, and I love it. Infinite banking has been something I've become more and more passionate about. And I've been on these AMAs every week for over a year now, which is really cool. My first kind of webinar, being out there with everyone, so I've loved it. But this week, actually, I had a client phone call. Someone came in just through these AMAs and other webinars. They wanted to talk about infinite banking. And he was like, I already know who you are. First time on the conversation. He's like, I've seen you on the AMAs. I know you're a Bears fan. I know you live in California. I'm excited to talk with you. And I was like, oh my gosh, this is going to be great. He just brought the energy and he was pumped. And I love that. I hope that happens more and more. So I'm more excited to be on these webinars now.
That is freaking awesome. Shauna, do you want to drive with the questions? Or
yeah, I have a few started already. So, Josh brought up, as I've been sharing the IBC information with my circle of influence, I have been challenged with a question that I can't seem to answer. The question is, what good does this do for any of us when the dollar, method of exchange may become worthless? So, and then again, remember his point of view is basically sharing IBC to others and then combating that question out in the wild. So
yeah, advice
too for that.
Well, I mean, the whole statement, of anyone you're talking to about the dollar becoming worthless is just really just kind of those folks are never going to do IBC because they're going to take every dollar they have to build a bunker in their backyard, because that's like literally that's the utmost doomsday thinking. That it's almost physically impossible in our lifetime that the dollar will go to zero. Tell me one other currency that has gone to zero. There hasn't been any. Have they lost value? Sure. Like Germany, you could go back when German currencies went down to nothing. Took a wheelbarrow of money to buy a loaf of bread. I believe that was right after World War II, if I'm not mistaken. Yeah. But that was just currency going down in value, and then the currency came back and now is known as the euro. The dollar, just to remind your people, still accounts for 60% of all worldwide trade. 60%. And it isn't changing. It's not like all of a sudden now it's 50 and oh my God, now it's 40. It's not like the gas gauge on my truck. Every time I get in it, I'm like, what the hell happened to the gas? The dollar isn't going to go to zero. The dollar isn't even going to probably lose significant value. Is a digital dollar coming? Yes. What is that going to mean? Probably nothing different than what you do today. You probably are, the folks that you're talking to are probably paying for things using credit cards, debit cards. They're probably Venmoing, doing PayPal, whatever that other one, Zelle thingamajigger. Guess what all that is? Training wheels for the digital dollar world. That's all they are. It's exactly probably what it'll look like. It'll just all be done through a controlled, regulated system, which all those are regulated anyway. So that's a really difficult thing to kind of combat, because if people are thinking that way, I don't know how you're going to get them over the hump. Everything in the United States of America, if they want to live here in the land of opportunity in the greatest country on earth, everything here is exchanged in the US dollar. No ifs, ands, or buts about it. That's how you exchange for goods and services. And if you think the dollar is going to go to zero, well, then get a plane ticket. Tell them this. Get a plane ticket and fly to Russia and live there. Fly to China and live there. Fly to Brazil or India or somewhere else where you think their currency, the BRICS, are going to be stronger than the US dollar. It ain't happening. Probably not even in our lifetime. Will the US dollar lose value? 100%. Will it change anything we're doing? Probably not a ton. Currencies always fluctuate in value. The dollar hasn't always been as strong as it is now, and in the future won't be as strong as it is today. However, means of exchange will not change, and using IBC will not change. So again, it's a difficult one. Sorry, I'm going down a rabbit hole with this, but it's a difficult one because the people you're trying to convince are already doomsdayers and already past the point of no return. I would just say, I would say this. Listen, if the dollar is going to go to zero, what you're going to need is you're going to need a bunker. So why not get all the money back for every bunker you build and live in your backyard?
Kevin, you got anything to add to that? I mean, that's a long one, and I appreciate Chris going that deep. I don't know if I would even answer the question, Josh. I mean, I go surround yourself. I'm going to take a different route. I'm going to go surround yourself by different people. Just plain out, because that's going to be a reflection of where you're going to end up is the people you're surrounding yourself with, and that's the people asking you. And maybe you're asking them two questions. One, maybe making a statement. Hey, you're as likely to have an alien come pick you up and take you away tomorrow as you are that happening. Or number two, where does your money go now? If they're working folks, where does your money go first now? And then you can tell them, well, then go look up BOLI. If it goes to the banks, go look at BOLI. They own $182.2 billion of whole life. Do you think they're doing something that we don't know?
All transacted in the US dollar.
I'd go in the US dollar. I'd go that route. So,
I'm just kind of curious. I'm just kind of curious too, if you're having a conversation with those folks, if they can explain to you, maybe turn around to say, what does the world look like if that happens?
I like that.
And just kind of let them noodle through it.
Powerful. End it with that. Like, that's what you do right there. Go ahead, Kevin.
Also, good. If you haven't read it, The History of Money, that book, there's in the history of the world, there's things have always been exchanged for value. And if one value might replace another, but there's always been something exchanged for value in the history of the world. It's the beginning of time. So you're not going to, let's say the dollar goes to zero, it would be replaced by something of value. And you have a policy that holds value, not necessarily a dollar, holds value, and it's going to be traded for something. But in the history of the world, you've never been able to replace that. But again, I'll let you draw your own conclusions. I highly recommend reading the book. It's really eye-opening, but great read.
Hold on. After Craig and Kevin's, this is called a mic drop.
I love that. Here's a quick and easy one. So Tony and Angie are saying, Chris, can you share about how you go about producing those awesome videos on a daily basis? Do you outsource or use specific tools to edit them?
Yeah, we have a team of editors. I don't even know how many we have now. Jordan is our videographer and lead editor. And then he has a team underneath him of, I think, 3 editors. And then we have James or JB, as we call him, who's another editor. So it's kind of been a slow progress. It just starts with one. First, we outsourced all the editing. We weren't getting that creativity that we wanted. It just looked like everybody else. Then we brought it all in-house. Today, we have a full production, multiple production studios, building a brand new studio, high-end cameras. We use Lumix. If anyone's looking for like the cameras we use that we found that works the best with zooms and everything, it's Lumix. They work phenomenal. Canons don't work so well. And, just editing is a tough one. There's a lot of VAs and everything that say that they'll edit, but you'll watch, your stuff will look like everybody else's and it will just get lost in the shuffle because everybody has seen the same edit 50 other times. You got to do something that's completely off the beaten path. You got to create your content, create your editing, and create your look and feel, and don't bend just because it's cheaper to edit just like everybody else. Stay true to your brand, stay true to your look and feel that you want. Find somebody else to emulate that you want to look like, that you want yours. Mine was Graham Stephan in the beginning, and now it's kind of a hodgepodge of several, but I kind of had this vision of what I wanted my show to look like from a branding standpoint, which was very hard because it was heavy B-roll, very factual third-party materials brought in, which requires lots of editing. But I've gotten that figured out, and now it's just a matter of just duplicating the process. And Tony and Angie, I will tell you, it's not easy. YouTube by far is the hardest platform to build, which is why it's such a great platform, because there is no shortcuts. There is no easy road. There is no buying proper followers on your YouTube channel. It is just the pure grit. And Shauna would tell you, I literally, like, if you say, Chris, what do you do, for your 40-hour a week work or your 40-hour a week job, which it's not a 40 hours, but if that was the question, I create content in video and do that for at least 40 hours a week.
That's the secret. And Chris, I wish you had some passion about this. It'd be cooler if you really liked it.
That's the whole thing. It's just giving, right? You're just constantly just putting stuff out there and giving. And I get new ideas because my audience is always kind of posing questions. And I'm like, we need to do a video. The other day, I spent probably an hour just drawing out what my next video was going to be. And I was going to physically draw out the training. Like I was going to literally just write it out and draw it out as I'm training it. You just got to constantly be thinking like, what's next? Always create. I think the biggest mistake most content creators make, or people new to it, is they go the easy path. They get the editor that's done it for everybody else and says, oh, I can edit your videos. I can do 50 of them a month, you know, and then all of a sudden your videos get no views because they don't catch any attention because they look like every other video out there. And that's the biggest trap, because just pissing money out the window.
I love it. I'm going to come back to.
Don't forget about Dominic's up top.
Yeah, hold on one second. I'm going to go back to Josh. So Josh, we were just talking about last time, he said, you know, when they posed the question, I unfortunately kind of just stopped even explaining anything more about IBC, which I'm sure that's where we all have been before. You know, and he's been seeking some new people. So you're definitely in the right place. Stick with us. And I think that, you know, the better you're doing that with your life does speak volumes, even if you stop speaking about IBC.
Yeah, my wife taught me that. And one other thing too, I'll say, and I've said this to Jason and our entire team, we actually used to chant it, you know, but basically you must know who your client is not, so you know who your client is. It's not, oh, I know who my client is, and therefore I know who my client is not. No. Learn who your client is not, so you then know who your client is. You don't need everybody. You just need the right people.
That's true.
I think a good question to ask people that want to argue about the value of any investment that you're getting is put it back on them and ask them, what's the cost of doing nothing? So if that person's approach is, I'm so scared I'm going to do nothing, what's their money doing for them? You know, what's the real cost? Yeah, you take a risk in anything you do. I could say going down the path of IBC, there's guaranteed contracts. You know what you're getting. You get a contract, not a handshake from somebody. But ask people, what's the cost of doing nothing? And see what and just shut up. Just see what their answer is. And see if they have a better answer than the direction you're going in.
You know, I always, as you most all know, I listen to Earl Nightingale every single day. There hasn't been a day in 62 days that I have not listened to Earl Nightingale. And I listen to a lot of content. And he's got the one, and I can't remember if it's, I don't remember the name of the video, but he goes through and he talks about risk takers. And my podcast, episode number 250, you should check it out, is all about this. It's basically risk takers, right? Who is the risk taker? Kind of to what Kevin was just saying, is the risk taker the person who goes out there, puts it all on the line, risks everything to chase their dream? Or is the risk taker the person that sits back and says, I just want security, and just works a 40-hour week for 30 years of their life, and then goes off on a pension and never, ever chases their dream because it's just too risky? Who's the real risk taker? Is it the person that put it all on the line, that failed multiple times, but now is living their perfect day, living their dream? Or is the risk taker the one that never went for it in their life because they were seeking security, that every single day of their life, so the day they go to the grave, they think about the dream they never pursued? Who's the risk taker?
Dominic's question, can I switch a UL, so universal life policy, and put it in a whole life? 12 years ago, family member opened one up.
I mean, I have the perfect answer for this, which is why I wanted to go back to it, I guess. So
yeah, thanks for I didn't even see that one. So.
Yeah. So Dominic, I actually, you know, I used to be a registered rep in an IAR for New York Life, Nine Life Securities and Eagle Strategies. And while I was there, I set up a UL, and it was set up in 2004. So I had a universal life, just the old universal life policy. I also had a VUL, so we could have either one. And I thought they're the greatest thing. Now, I since left there and everything else, but those policies still stayed in force. And I waited for them to come out of the surrender, which the surrenders back then were 12 freaking years. I had to wait 12 years. So it's very similar to yours. I had to wait 12 freaking years to get out of surrender. The year my policy turned, that year where it was out of surrender, I immediately did a 1035 exchange into a whole life. So the answer is 100%. And it's just so ironic that it was 12 years ago, because that's probably how long your surrender charge was. You're probably in a perfect time right now to do that exchange. And even if there's gains in there through the 1035 exchange, you won't have to pay any tax on it. It'll just move all the cash value from the UL into the whole life. And the MEC rules are really favorable for that. So get on the phone with one of the folks here and we can kind of show you how to do that. And I think you'll be really freaking happy you did.
Yeah, I love that. And then real quick, to get on a call with any of us, you go to mentors.beyourownbanker.com. And Linus is joining us today. Mentors.
I've been on the phone with him twice today, I think. Was it twice or once? Or
Linus, introduce yourself. Welcome.
Hey, folks. My name is Linus Snow. I'm on your application team. So some of you guys might have actually had your application through me.
Very good.
And last week we had a couple questions that we, were asking, kind of shooting from the hip, like, can you have a beneficiary that lives out of the US? And we were like, I don't know. And then afterwards, Linus was like, yes, you can actually. So we were like, you know what? You should probably hop on some of these calls. So thank you for joining us today. All right. Next question. 2 questions from 451 Credit. First is, any advice to get significant others on board? And then the second is it possible to do one lump payment once a year, say 5,000 to 10,000, a dump in of say 15,000 to 20,000 the first year, and do monthly payments? Oh, like switching the, like maybe the first year he wants to do an annual payment, and then later he wants to do monthly.
Gosh, who wants this one? This one's almost like, this is like, the questions that get sent over to the dude, they're just softball tosses.
Linus, you want to start us off?
I'm still wrapping my head around the question.
Well, let's say, how about getting a significant other on board with doing a policy?
I feel like I get that question every other day. It's a lot of people deal with that. And a lot of people succeed, I feel like, where they are able to teach their spouse what they're doing by showing them their policy design, their plan, giving them a breakdown, helping them understand the mindset behind it. And it brings them on board most of the time. It is difficult though, when your spouse does not know what you're doing or why, or have the same mindset and just finances in general than you. It makes it very difficult. I don't know if I have a great answer for that, other than just the more education you put in front of them, the more they'll get it.
And it's usually not the 90-minute video. Find the shortest. Chris has got a couple. That's one that you and I send back and forth, Carson.
Yeah.
Where's the short 25-minute explanations of IBC? Start them there, and then have them come on the shows. I love when couples come on the calls together.
Same.
That's the easiest. I literally had one the other day where the whole time the husband sat in the background while the wife was talking about their dreams, their goals, what they want to accomplish, and then she kept like feeling his energy, not saying anything. He's like, but he doesn't believe this. I'm like, hey, it's not going to work then. That's just the truth of it. Like, if you can't believe it, it's only going to work. It's almost like Henry Ford saying, you either think you can or you think you can't. Either way, you're right. And it's the same with IBC. You either think you can or you think you can. Either way, you're right. So with the spouse, it's the same thing. Or you can do what Chris said earlier. Just show them, like, pay off the debt. Do it anyhow. And ask for forgiveness when your family's debt free and you're protected. And if you're the father doing it, you're providing, you're protecting, and you're creating, which is what we're supposed to do anyhow. So do that, and then they'll get on board.
Yeah. I will also add, and this just came to me as you just said, providing and protecting. Like, it's not an investment too. It's also life insurance. So, I mean, I don't know if it would make it any smoother if they're the beneficiary, if your children are the beneficiary, like, you know what I mean? It's not like you're just putting your money somewhere. You could also have a death benefit. So I don't know if that could somehow be, I don't want to say the word, maybe leveraged in how it is for the family.
Yeah.
Good point.
Yeah, I guess I kind of look at this as a challenge because, I've been through that myself with trying to get the significant other on board. And, it took a while because, we're all trained with a certain perspective. But, now she's got multiple policies, buying real estate with it, just crazy, talking to everybody she knows about it. But how did I do that? It wasn't from just shoving it down her throat every day. It was educating. It takes time. I mean, this is going to be a long haul thing for you if that's what you're trying to do, is trickle information into them. Like Jason was saying, show them what you're doing, show them the benefits. And I think anytime you have patience and you don't make it feel like a rush job, you're going to have a lot more success. So I'd say take your time, find out what the concerns are, see if you can help answer questions. But, it's like all of us on this team, we always tell people we don't do any selling. We're just here to educate. And if you want help, then come alongside and we'll help you. We're not here to convince and push this stuff down to, make anyone do anything they don't want to. So I don't know, it's going to take a little bit of time to get there.
And one of the things to think about, I'm not going to try to answer the question on how to explain what you do, but as you're structuring a conversation, and we all do it every day. I remember once my daughter, I'm trying to explain what I do for a living, said, talk to me like I'm a 10-year-old dad. You're way over my head. You're getting too technical. I don't understand all these acronyms and all these terms. So since then, I've tried to do three things when I'm talking with people. One, the conversation has to be simple. If you're just explaining it to somebody, try not to be so technical. Think in terms of how can I simply explain this to them? Jason brought up a good point. It's about lifestyle. Where are you headed? Where do you perceive yourself at some point in the future? Number two, is it measurable? That's when you can really get into it's going to help us pay off our debts. It's going to do this. It's going to do that. It's going to finance a vacation. It's going to get us to retirement, whatever it is. And then the last thing it has to be is transmissible. So in other words, are you explaining it in a way that they can turn around and explain it to the rest of the family when they're confused, or their friends, or somebody they're having dinner with? Because then you know that you've explained it in a way that'll create more value for you over time, and people will understand why you're doing it. So simple, measurable, and transmissible. Just think about how you're structuring the conversation, and people buy into it more.
I'm going to find us a synonym for transmissible. It's got to be an easier word than that.
I've been trying for, if you could come up with it, get it.
I'm doing it right now. We're going to ask. We're going to figure it out.
Imagine being on a stage in front of people and not getting tongue-tied trying to say that.
That's why I like the first two, right? The first two are super easy. And then it's like, wait, what's the third one? So synonyms: catching, communicable, contagious, contractable. Now that sounds
well, repeatable. You want to make sure it's
maybe.
repeatable.
Repeatable. There you go.
All right, let's get into the second part of the question, and then so we can move on. So, second, is it possible to do one lump payment once a year of about $5,000 to $10,000, a dump in of say $15,000 to $20,000 the first year, and do monthly payments? And he followed up a little bit more, just saying, I'm wondering about the monthly payments being like velocity banking, so I can as much in there for compounding and lending purposes. So I'll highlight.
I mean, the simplest way to answer this, I think, is we can pretty much design anything you want within, as long as it's within the MEC rules. We can build lots of flexibility into any design. I mean, everybody on here knows how to do illustrations. Linus and Craig are definitely really good at them. So all your stuff, I mean, it's kind of a multifaceted question. But I think, yes, the answer would be the simplest way of putting it. We could design it that way as long as it fits within the MEC 7 pay IRS rules. That's the only thing we'd have to comply with.
Okay. I think the next few questions that we have could kind of bring some clarity to that anyways, just by moving on to. So Coast to Coast is asking, can you use a credit card to pay for your premium at once, more so to get some points?
I would love that. Could you imagine?
Yeah, that would be awesome. I don't know why. I thought One America, Kevin, doesn't One America allow up to a certain amount? I think they do.
It's up to a certain amount, and it's low. It's about $3,000. Yeah. I think we just raised it to maybe $5,000 on long-term care. The reason is, as these products are built, the cost of doing digital transaction is not built into the product.
Oh,
so if we went in a direction where somebody said, all right, we'll build the product so you can get American Express points. So you could qualify for diamond level on Delta now, or American Airlines, or they're all going to their credit cards, and that's how you qualify. That's why car manufacturers won't do it for you. You couldn't go to a car dealer, use a credit card.
Limit.
It raises the cost of doing business by anywhere from 7 to 15%. Mm-hmm. And if they priced it into the policy, you'd lose value as a customer and not get the returns you're looking for. So, it's a give either way. it's great to get those points. But as far as transacting larger amounts of cash, right now, I don't see a lot of businesses doing it because of the cost.
That makes a lot of
Well
sense.
Kevin, I don't know. I think this was something I checked into before, but I think you can only do that on the initial premium payment, but it's not ongoing. So,
Correct. Yes.
Yep.
I mean,
That's
you know,
correct.
listen, how many of you guys and gals, you know, when you were growing up had like, you always knew what the black card was, right? And you always kind of were like, oh, someday I'm going to have a black card and someday I'm going to buy a car or something with this credit card. And now we can't even do what we dreamed of as kids. Like we wanted to get this little metal black card and we wanted to go buy a car with it. Just to say, well, how'd you buy the car? I used my credit card. You can't even do that. I mean, they're just taking all the fun away from all this stuff.
Yeah, they definitely limit to 5,000. I tried to get 10,000 on my last car on my credit card for that exact reason, guys. So I'm with you. So Chris, are there fees each time you borrow from your account, and is there a limit to the number of borrowing in a calendar year?
No, there's just the interest on the loan. There's no fees for taking loans. You can take as many loans as you want as long as there's cash value.
I was going to lob that one over to Linus. That was an easy one. So get him rolling.
Can you insure child over fund and use policy for a decade, then transfer ownership to them? So can you insure a child and overfund and use their policy for a decade and then transfer ownership to them? Sorry, I had a hard time reading.
The last part of the answer is yes. And then the beginning part of the answer is kids are more complicated where it's reverse engineered. And so it's based on, depending on the company, it's based on how much insurance is on the matriarch or the patriarch. And then it's taken the half of that, and it's usually up to $1 million. A couple times it's up to $2 million. But so it's all about really knowing what you want to accomplish for the child and what's your budget look like. It's really meeting where you're at. So it's an it depends answer, but you have to first understand that it's reverse engineered based on the family's protection.
Okay, sorry, I'm bouncing around trying to find questions and read them all at the same time.
And you're doing a great job.
Thanks, guys. Okay, so
Chris
is asking question on just show them. You know, in the first year dump, can you dump in 10,000, borrow back the max right away to show how it works, then do the rest of the dump in for the year? So you can't just do a dump in and not do a premium like your actual premium. So that
but back to that. So I'm just going to refer back to Mr. Burr, Devin Burr, because this is kind of what he did. You know, he had some IUL guy in his ear telling Devin that I was a scam artist and IBC doesn't work. And he was doing it all just so he could sell an IUL policy. So Devin bought the IUL policy, which he has since surrendered and lost a lot of money on because it did nothing that the guy said. But anyway, that's a whole nother story. So Devin put, I think, like $6,000 into a policy for his daughter just as like a trial run because he didn't think it would work, and immediately took a loan out and then was like, holy crap, this actually works. So kind of like you're saying, like, can you test it out or just show them? And then he went I can't remember what his first policy was, 200,000 on a policy for himself. So you could, if you don't believe us, but I mean, why not just let us mathematically show you exactly how it would work to prove you? I mean, hey, if you're that kind of person that just needs to dip the toe in and just say, oh, told you so.
Well, I mean, there's a lot of those folks, though, Chris. Like that's someone I was talking to today, where you could hear him getting uncomfortable with the number he wanted to put in. I was like, don't do that. Like you'll never get there if you're tightening up right there. Literally go to dipping your toe in the water. Pick the $2,000 credit card you're going to pay off. Put enough in that it's 10 times your age just to show it works. Take a loan out, pay it off, recapture it $100 a month, and then go bigger. I had a guy start at $500 a month, and the second policy was $50,000 a year once he proved to himself. So there's a lot of that going on because people are getting scammed all the time, unfortunately. Yeah. So
yeah, and I mean, I didn't do a dump in on my first two policies. I'm doing one on my next one. You don't have to do it all the first time. So Carlos is saying, had my call with Linus and filled out my application with Jason. Can't wait to start using a policy to take my money back And then we've got Tim is saying, you know, he wears his BYOB hat all the time and everyone asks what that means. Love that. Okay. Couple more. Okay, yeah. Sorry, a couple nice comments. So Tony and Angie said, by the way, the last money school 3-day essentials were awesome and I'm coming anyways. I had to ask. All right, another question. Oh, wait. Okay, wait, sorry. So this is the first question. So if I've been on the last few money schools and I have, what will be different in the next one?
Everything. Every 3-day, we completely revamped the whole thing. We revamped the speakers. There are some duplicate speakers just because I think people would literally hate us if we dropped some of the speakers that are on at every one, like Brent Carlson for the entities. I mean, but every time he talks about something different because it's driven by the questions coming in. The whole first day that we're doing, like, you know, we're doing what we're trying to do with these 3 days, and I can't say this is always going to be the case, is every 3-day, me and Craig, you know, we're in this team are trying to put together a unique training that's never been done, or a training that we've never done before. You can't go on and find a YouTube video for it. We've never covered it, probably because it's difficult. It is probably the reason we haven't done the trainings on it. And we're doing the same thing on this one. And then, Shauna, who are some of the other speakers that have never been on before? Because I know we've got a bunch of different stuff this time.
I would love to answer that for you, but I got a million tabs up and I'm not totally sure at the
I
moment.
might be able to here. I'll look at it. Let's see. So like the ones that'll be duplicates, you know, would be Matthew Sullivan, but he's only a half hour. And again, that he fills a really big niche. Kevin Shortell on node investing, but every time Kevin comes on, he does the same thing and redoes a brand new training just for the 3 days. So that's not really that. We got Christy Van coming on. She's never been on the 3-day. We got Precious Metals. I mean, that's never been covered on the 3-day. We got Noah Harris coming on about private lending and borrowing. I don't remember if Noah's been on the 3-day. If he has, it's very new and he'll switch it up. We got Mike, understanding how to underwrite like a pro, brand new. We got a whole thing we're doing on economic conditions and building the bridge. Greg Hurling would be a duplicate who's been on about self-directed. Brent's a duplicate. We got Archangel coming on to talk deeper about the flipping forklifts, flipping equipment. Let's see. Listen, most of these speakers are brand new. Yeah. So pretty much outside of maybe I think I said 4 people that are the same but not the same. It's all different, Tony and Angie. I mean, it's designed that way. I know the name's the same, but every time we know that we're getting a lot of the same people, so we don't duplicate the same content.
Yeah, I like to say it's about like 60-40. It's like 40% is the same basic stuff that we kind of have to, it's the fundamentals. Like we're not just gonna, even when the basketball players come out or the hockey players come out, they got to do what they got to do in the very beginning to get warmed up, and then they start doing some more. Okay. So, Chris, is the whole idea of IBC a tax deferment? If so, to whom is he deferred to? Kids, grandkids? If not, then hypothetically, what percentage are we talking about?
The whole idea is definitely not tax deferment. That's just like a little sprinkle on the top. Like you got your ice cream sundae, you got every topping on it. You're like, yeah, what the hell? Give me the sprinkles too. That's the tax deferment. If that's why you're doing IBC, please do not do IBC. IBC is a process of taking back the banking functions in your life. So for a second, look at your bank statement, look at your checkbook, and just count or add up all the checks you write to someone else's bank. Credit cards, car payments, HELOC, all those that you pay to somebody else, add it up, write the number down, multiply it times 12. That's you giving up control of your money. That's you not taking back the banking functions in your life. So what is the infinite banking concept? It is that. It is the process of taking back control of your money, controlling it indefinitely into the future, doing it in a tax-advantaged environment, which would be the tax-free nature. Screw tax deferral. I mean, tax deferral you can get in your 401k, but it is tax deferred, and protecting you against judgments and liens and being completely private. You might have $10 million. Do you want the world to know you got 10 million? This is where it should be if you don't. And as another cherry on the top, not sprinkles, cherry on the top, you provide a legacy for your family the day you leave this place. When you go on to a better place, there will be a death benefit paid out tax-free to your family. Oh, and I forgot to mention that beautiful thing that Albert Einstein loved so much called compounding interest, but let's make that uninterrupted compounding. So if none of those things strike a fancy for you, good. It's important for us to understand who our client is not, so we know who our client is. And if our client or if somebody wants tax deferral, tax deductions, that is not the client we're looking for.
Yeah, I just want to clarify. The money you're putting into a whole life is your after tax dollars. So there's nothing to defer in the beginning, correct?
Correct.
You're deferring the gain. Yeah, in the beginning, no, but you're deferring any of the internal buildup in the policy, the growth, from the uninterrupted compounding interest. But that's so far down the line of the reasons why somebody would do IBC.
That's okay. I just want to clarify for anyone who's thinking that, IBC is a place to defer taxes by just putting money into it up front, and then you're not paying taxes this year, which is that's not the case.
No, it's not. My CPA is like, you put how much into this? Why didn't you put it into a qualified plan? I'm like, I either got to teach you this or I need to.
Yeah, I would say also for coast to coast, get yourself this book. And there's a lot of case studies in here and great information that Nelson Nash has about the whole IBC program. So thin book, should be able to read it pretty quickly. I've read this. I've been stuck on page, has something to do with the 3-day, but I've been stuck on page 52 lately.
Well, it's like 52 to 62. I think you're stuck on.
Somewhere in there. But yeah, so it's got a lot of use cases and different mindset things to think about in terms of IBC, but hopefully that'll kind of fill in some of the gaps too.
Perfect. And then next question is, I am 54 years old. Am I uninsurable?
I don't know. Are you healthy?
Good health.
Good health.
54 is a spring chicken for what we do. I was looking today and I knew the numbers. Like somebody was like, I'm 63. Can I still do this? I'm old. I'm like, dude, like the majority of our clients are in their 60s. I think if we were to literally add up all of our clients from 55 to 68, that's the bulk.
Chris, I actually think about that a lot because one of the questions I'm pondering on is why is it to your, like, where's that pain point when you're in your 40s, 50s, and 60s, even 70s, where you're just like, oh my God, whatever that was been taught to me hasn't worked. I need another plan. And they're almost to the point of being desperate. Like I had a couple that was 72, no insurance on their bodies at all, very little debt, but they just wanted to do this to not only create legacy, but to do that. But the question goes back to is like, why does it take people so long to like see, hey, what we're being taught, what we're being groomed by is just not the truth. It is all false. It's like our health, right? It's the same thing with food. Most of the things that we're eating aren't even real food. So
I'd like Kevin's take on this. I mean, what is it? There is a point in people's lives, and I know it's really tied to income and net worth because, obviously your 20s and your 30s, you're kind of building, figuring things out. 40s, you're starting to build, but 50s are really, like just statistically where wealth really starts to be built. And that's where you really got to start asking these hard questions of like, hey, how do I not give all this away should something happen? Hey, how do I make sure my kids get something if I'm no longer here? Hey, how do I protect and preserve this? I mean, I don't know, but Kevin, like, what would be your take on that? Has One America ever done any studies on that?
We haven't done any studies, but when you think about it, by mid-50s, most people in this, if you've never been through it, I put 3 through college. The day your kids get out of college, you never realize how much money you were spending until they're out of college. And then all of a sudden you're flush with cash because you've been spending hundreds of thousands of dollars educating them, paying your mortgage off, getting your estate set up. In about your mid-50s, early 60s, you're reaching that point as you start retiring when you start thinking more about how is this money going to work for me now? I have the money. But the other thing, as Chris was saying, you start thinking about legacy. And it becomes your kids go out, they get married, they start having grandkids. But you're at a point where your parents are towards their later years and maybe you're taking care of them. And you're seeing what a legacy really does for you. So it changes your mindset, changes how you're looking at money when you start doing that. The other thing that's happening, which is really interesting now, and you see a lot of articles about it, is we've aged as a nation. And right now in the world, there are more 65-year-olds cumulatively than have ever lived in the history of the world up to now. So you take the 2 million years that us human beings have been around, there's more elderly people cumulatively than have ever lived in the history of the world. To give you an idea of that age group and how big it is, and how big it's getting with the baby boomers. China's seeing this now. Japan's having a real problem finding care and, thinking about what do we do with our elderly people. But we're seeing a lot more younger people with generational wealth being transferred to them. And those individuals, too, are thinking about, at a much younger age now, how do I start setting up a legacy? Because I've been flushed with cash, and they can take care of things that we couldn't when we were 35 or 40. Because all of a sudden they got generational wealth coming to them. So, it's different points in life, but what you tend to see a lot of times about the mid-50s is when your mind shift changes to how you look at money and how you start looking at your legacy.
Yeah.
Kevin, it's an interesting thing. I just did an Instagram video on this. It was called Pink. It's not what you think. It's not bubblegum, not Barbie. It was passive income, no kids. And we did statistics on 63-year-olds, and we kind of did a range 63 to 67. That group right there, that age group, accounts for 17% of the entire population in the U.S., but it accounts for 50% of the wealth of this country. So maybe that's part of it too. I mean, it's just that age range is when wealth starts to be built, and they got to start thinking about it. I mean, and I don't want to butcher the name, but how would you say that? Daanen? Danen?
Danen, yeah, I think.
Danen. I don't know how to pronounce the double A, but he got insured at 57 with high blood pressure. So again, there's another one. Like as we get into our 50s and 60s, we just start thinking differently. And Kevin, I can't agree more. I mean, when I had Vivi, everything changed, and it really went from cash value is always going to be important, but I started really looking at the death benefit. Like, hey, if I go, how much are they getting? That's not enough. I need more. But yeah.
I'm going to put our round robin link in the chat again. It's mentors.beyourownbanker.com. And we've got a ton of people standing by to help you guys get through. And then there's a couple more things to talk about. These two questions back to back too. So can you walk through what happens with the medical requirements? I don't know if Linus, you're that app specialist. I don't know if you want to hit this one.
Sure. So we do your app, but sorry, my voice is gone.
What a day.
Yeah. So we go through the application on a phone call with you first, and that goes through some medical questions, but then there's usually a medical exam you need to do. And we actually use a company that comes out to your home or place of work, or wherever it's convenient for you to actually do an exam. They pull a blood sample, take a urine sample, and take all your vitals, measurements, and whatnot. And so that's usually pretty quick and painless, typical medical exam. And that's about the extent of it.
Yes, Linus actually helped me with one of my most recent policies. And I didn't tell you this, Linus, but you know how it wasn't available in my area? Wherever you send this, they were literally calling me on the other line, trying to then book a nurse to come out. And then when she was here, she brings her scale, she literally measures me, pulls the blood, all that sort of stuff. We go over pretty much the same medical questions, and then they box it all back up and send it out. And I personally like them coming to my house. I don't know. It just made it so much easier for me.
I always have them come to my house.
And I think if you think about risk also, insurance companies aren't, of course, we love the healthiest people because obviously they're going to live the longest. But insurance companies not trying to pick just the healthiest people. They're trying to assess how much risk are we taking on this individual. And most individuals probably can get insured the way insurance companies approach it. It's the amount of risk you take on that person based on. So for instance, I'm a type 1 diabetic. No insurance company wants me. They don't want me because longer term, they know what the disease does. But you can take people that are cancer survivors all the time that are in remission that the insurance company goes, hey, we might be taking a risk, but the individual may think they're uninsurable, but really having the conversation and going through the underwriting will really answer as to what the level of risk the company is willing to take on you.
And One America is great with that too, with preliminary underwriting, where we can just ask the question. If you don't know, and you have to be honest too. We've had people come through and, everyone does this. They don't want to tell you they're unhealthy. And then you get to the end of the call and they're like, oh, I just had quadruple bypass. And I'm a cancer survivor. And I had a bankruptcy and I'm a felon. It's like, okay. Like that's literally almost a completely true statement I just said. Like I've had all of those conversations come up at the end after spending an hour with someone. It's like, dude, just tell me. Just tell me and I'll ask for you. Right?
I kind of want to hang out with that guy.
I will definitely say it feels uncomfortable to do a health exam because it's the one thing that's truly you know what I mean, and you're about to get graded on it. So even if you're in good health, sometimes it just feels like, I don't know, like you're going in for a different type of test. And they're going to tell you
for every person. And I recommend everyone here letting the person know that as you go through the process, you will be a little fearful. You will have you will get scared. It's perfectly normal. Like I remember standing there having my last paramedical. She made me an inch shorter and 8 pounds heavier. And I'm just like, what are you doing? I just weighed myself this morning. I was 100 and X amount of weight. And now you're making me like almost 10 pounds heavier. Like, what are you doing? That's what you are. And I'm like, I've never been 5'9" in my whole life. What are you talking about?
Well, that's an aging problem too. You get shorter.
That's what I
mean. She literally put my BMI at almost like 26% or something. I'm like, what is happening? Like, so. And then I was fearful that I was going to change something and I wasn't going to get the rating I wanted. And it worked out okay. But still, like it's part of the process. You're going to get a little bit freaked out.
Yeah.
Normal.
And then a similar question to piggyback off on is, how long is the process from application to getting the policy? And let's see even a step more. So it's like getting on a call with one of you guys. Then there's the application. Like, why don't we lay out the whole thing?
And Jay's in good health.
And Jay, we've seen you on here a lot. So I would ask you, like, if you knew that, well, here, I'll give you context. So if you knew with a paramedical, you could go from start to finish, because I've done this with my wife and myself, in less than 3 weeks, 18 days and 19 days, start to finish. But most people take an average of 4 to 6 weeks and up to maybe 81 days. Why is it? Like, why would you think that happens? It's what we were just talking about. That's why I want to ask this. What Sean was just saying about the paramedical, or about signing the application, not understanding everything, or signing something you don't understand. What you're really trying to do is go through a trial application to see if you can get approved to be a mutual owner in a mutually owned company. It's all a trial until you get approved. You don't have to take any action. You can change everything. But the answer is it can be really short depending on how fast and how much you communicate. So.
And if I can, and I've been doing this for years.
I saw you smile. I was hoping you'd say something.
And as a society, we want things done real quickly. But I can guarantee you this, based on what these policies return and the position it puts people's families in, and for doing something in the short term that pays off in the long term, never in the history of this industry has someone gotten to the end of life and this policy has paid off and their family has said, we still remember it took 90 days. And we're still not once. When you're handing them $1 million check, not once do they complain that they invested that 90 days. It doesn't happen. It's the best use of your time and your family's time moving forward than you can believe.
I mean, Chris, Mike, drop the mic again, because that really was great. I loved that, Kevin. And it just takes time. Like, I submitted my request that I wanted to have a policy. Then a week later, I got on Linus's calendar and we did the phone thing. Then the next week, a whole nother week later was when the nurse came. And then a whole nother week later was when the results came. And it's not a lot of work. It's just kind of, for mine at least, it just seemed to fit up with my schedule about 1 week at a time. So it's taking like weekly steps. And now I'm ready to fund. Honestly, I got an email from Linus today saying time to fund this.
And from an insurance company standpoint, just be prepared when you're asked questions. Know who your doctors are, know what your medications are, any treatment, if you've been treated for something in the past, cancer, something like that, what stage it was, what the treatment was, what's the ongoing treatment. Because the more information you give up front, it cuts down the amount of time on the back end of collecting information. Because if we pull medical records and you didn't disclose you had cancer, then we're going to come back and ask, who is the doctor? Where'd you get treatment? But if you've disclosed all that up front and you have it handy, it'll pretty much flow pretty smoothly.
I love that. And this is a similar question when we're at time. So we'll finish with this last question before we wrap. And we encourage everybody to come back every week. What would disqualify someone from a policy?
Lennox, you want to hit that one?
Yeah, there's different things. One that's coming to my mind first would be if you're on probation, sometimes even depending on what level of crime that might have resulted in the probation. So if you've been on probation in the last year or so, it might even still be a disqualifier. So that's one thing for sure. Drawing a blank
height and
on
weight,
all the others.
You're billed well, but insurance companies have gotten extremely liberal on billed because we have found out that billed does not dictate life expectancy as much as you think it would. It's the underlying issues people have, not really their height and build. So some of the height and weight charts are astronomically liberal.
Yeah, a couple other things would be if you're in active bankruptcy, or sometimes if you just had a bankruptcy discharge very recently, that will even be a disqualifier. It just poses too much risk of even, stopping paying your policy. And then also sometimes if you have too many items in collections, that can be a disqualifier where you're posing too much of a financial risk to not paying the premiums.
Good point. Yeah, a lot of people don't know that, the whole life policies, like, when you start a whole life policy with an insurance company, they've got a lot of money into that policy before it even goes into force, because all those people get paid to process it. So when it goes in force, like I don't remember the amount of years, but it's years before the insurance company will even make a profit on your policy. Years. And if they look at you as not a good credit risk or somebody that's going to pay your premiums, like they're not going to take the gamble on maybe this person will get through the point where we actually make a penny on them. And a lot of people think insurance companies make all the money up front. Maybe in IULs they do. They're not in whole life. And IUL is profitable probably from day one because of the surrender charge and all the other bullshit they put in those things. It definitely swings the pendulum over to you and not the risk on the insurance company. So all the risk is on you in an IUL, but a whole life is not that case. The insurance company is taking all the risk. So it matters to them on how you're going to pay the premiums and for how long. Shauna, can I hit one more just as we close? Because I want to hit this one right here. This is more for Private Money Club. It says, are there states that cannot post deals in PMC? So when we first launched, yes, there were 16 states excluded, but that is gone. So now you can post in any state on Private Money Club. And especially in the new version rolling out in April, you'll be able to post any deal in any state. The only restriction, unfortunately, Craig, we just learned this the other day, will be for Colorado residents. Your state's wonky. Colorado residents cannot lend. So a Colorado resident like Craig would need to set up an entity with an address outside of Colorado in order for him to lend on PMC. It's crazy. But he can post a deal in Colorado and raise money. He can't lend from being a Colorado resident. We just learned that. It's wonky. Anyway,
I don't like that at all.
Yeah,
I know.
You just make sure your entity has an address, for the registered agent. It's very simple to fix. But yeah, we just learned that the other day when we did our final legal review of what can and cannot be done and who can and cannot lend and borrow. But good thing is people can post a deal in any state.
And let's see. So there are some more questions that are coming in, but we are past time. So I definitely want to suggest you guys coming back next time. And if anybody needs a call, you go to mentors.beyourownbanker.com, and that's it.
That is it. And also, if anyone wants to join us for the 3-day that everybody's been talking about in the chat, I'll post that link up one more time. Shauna, what's the discount code on that?
I think it's a virtual discount, all one word.
Virtual discount gets you half off. So get your tickets because that's coming next week. I think next week. Seems like it should be further along. But anyway, thanks everybody for joining us. Thanks to our awesome panel here, bringing just some awesome value and great answers to your questions. We'll see you all on the next live, which I think is tomorrow and the next day. And the only day I think we take off is like Saturdays and Sundays, or maybe it's just Saturdays. Anyway, enough of that. We'll see you next time.